Ladies and gentlemen, welcome. Today, again, before looking at the price, I would like to show you some data from Data, which is making the hybrid analysis, on-chain and technical analysis, and he's looking at the relationship between realized price and market price. Basically, they're very similar to MVRV, which is market value to realized value. We did cover it in one of the videos. If you want to look at it, just go to the on-chain playlist. So the basic idea here is that he was plotting this ratio and defining some periods for bull markets, as you see here, and bear markets. And the idea here is that with the growing cycle of the bull market, you'd have to see the higher lows every time you see the new correction, with a rare exception, for example, like here. But generally, as a rule, every new low should be higher than the previous one. And right now we're forming a new low as well. This one was for the previous correction, this one is the current correction. And the previous one was at 1.62. Right now is something about 1.8, and he also mentioned that we could use Fibonacci retracement levels for those values of MPRP, and he is placing them at 9,460, 9,360 for these two values as closest Fibonacci retracement levels. And he also mentioned that since there is an exception of the low going even lower than the previous one, although the bull market still continues, we may in principle see the same thing, and then at that point new levels for Fibonacci will be like this, so 8,600, almost 8,000, 7,500 and 6,700. Although the lower you go, the less likely this will happen, and he personally states with this prediction, and eventually he actually said that it's very unlikely that the market will go lower than 8K, probably with 8.6, 9.3, 9.4 as the zones for the bounces of the price. And indeed, in fact, we see here that the level of $9,400 was a strong support despite of the low volume for a while, and although it is said that the more often you test the level, the more likely it will be broken. So far, it seems more or less strong, but I think it's really important to look at the current situation from the point of view of the huge player and where this huge player tries to find more liquidity. Because you know the biggest problem for such investors, such traders, is to find the volume to step into in the market, because they can't just buy the whole order book. Their positions are too huge for that. So there are two strategies which they can use. First, if there are a lot of the stop orders at the area above the current price, they try to manipulate the price in the way that the amount of those stop orders will be growing and growing, and then eventually just shoot the price through all those areas. I marked them here like $10,200. You see the price did react with that several times. $11,000, again, a lot of the reactions with the price, and $11,900. So as soon as the huge volume in terms of the stops will be around here, then it's reasonable for the price going up. All of that is valid if we still believe that the trend, the global trend, is growing and will not go to the new low. So probably we all believe that, or at least the majority of us. So I don't need to convince you in this, or at least let's make such an assumption. And another thing is, before going up, of course, there are a lot of people also going long. So again, for the huge player, it's not reasonable to go up with all these additional passengers in the train. What they want to do is they want to shake them out. So you can imagine that people who are going long, they have to also set their stop losses. So where those stop losses would be? I would assume that those are in the same areas which we discussed previous times, when we have the strong resistance and support areas, which is from 9,400 to maybe $8,300. Of course, you can go even lower with the zone of the previous correction, but this is a bit of a stretch in my opinion. So probably somewhere around here. And in principle, if you look at this at the first time, this may seem to be much closer, and it's like easier to move the price here, especially after the momentum is already gained during this whole drop. But the point is, as soon as we will try to push price lower, first we'd have to go through the pressure of the buyers, which will unavoidably appear in this area. So we need to sell a lot of the Bitcoins, and it's not clear whether the amount of the buyers around here will be the same or lower than amount of the stop orders of the people who went long at some of the points during this drop. So it's kind of the risky deal to push it that low. Instead of that, as I said, maybe the short squeeze is much easier, so you can't really get as much of volume in this area as you will get here. So you can see how hard actually to be a whale and make a decision between one or another. On one hand, it is risky to push the price lower, but at the same time the most of liquidity is here. At the same time, it's easier to push the price higher, but you won't get as much volume here, which you can use for your buys. With that said, I would like to finish with this chart. You see this is RSI indicator here, and there are two lines, two zones which are shown here, 55 level and 60. And one of the major arguments for the correction to continue from the bear side is that during the whole period of the previous bull market, actually also here, every time we have a stronger correction, the RSI level went somewhere to 55, maybe even lower. And right now we seem to be having a stronger correction, so why not to see RSI going even lower to this level? At the same time, it will lead the price to this 100 days moving average, which is also reasonable, and after that we can start to grow to a new local high. But at the same time, the bullish argument is that first of all this price action during this cycle is very different from the one which was before in the previous cycle and the cycle before that. So maybe when you're making such parallels is just invalid, it's just incorrect. And at the same time, even though we had a lot of the cases when RSI went that low, there are other cases when it actually didn't. So even statistically, this argument is not that strong. But putting all that aside, what I would like to mention is the majority of the corrections in the history of the Bitcoin price action was like 30 to 40%, and not only in this cycle but before as well. So now we already have like 35%. So what are the odds that we are going to 50, 60% or 70% of the correction instead of having maybe a little bit lower dip or even not having that and going sideways and go up? I think the chances for the latter are much higher. But again, this is my personal opinion, not a financial advice, guys. Alright, that is it for today. I hope it was useful. Thank you for watching.